This special podcast is brought to you by Futuregrowth Asset Management. I'm speaking to Amrish Narrandes, who is an investment analyst with the asset management company. Amrish, what exactly is your role at Futuregrowth?
So Candice, thanks. Yeah, exactly that. I'm an investment analyst focusing on private equity deals. And to break that down further, more developmental equity, which is a subset of private equity.
Okay, so that's quite interesting because most investment analysts are focusing on listed equity. We know that Futuregrowth Asset Management is known for being a fixed income house, and now you're bringing equity into it. How does that work?
Yeah, so this is correct. I mean, Futuregrowth currently had about 150 billion fixed income assets under management, and what we realized as a house is, after doing sort of detailed credit analysis on companies and DD, we realized we're willing to give these companies debt. Perhaps it's a good opportunity now to also look at equity, and I think that's about how the equity side was born.
Okay, so how would you then differentiate the Futuregrowth Developmental Equity Fund from other kind of conventional private equity funds out there?
So we have a fund that's called the Developmental Equity Fund, which has about 1.7 billion assets under management. So and this is a very important question. I think firstly, the private equity funds, the other private equity funds are closed-ended funds. Our fund's open-ended. And what that enables as well is, if you look at who our clients are, they are pension funds. So we have capital that actually can be in it for the long haul. So we wouldn't never, where a typical traditional private equity fund will look for an exit after 5 years. We actually, our investment horizon is a 10-year period, which is a substantial, difference.
So do you provide liquidity in the fund?
Well, because they clients, you're exiting is possible, but it's not. We do keep some cash for liquidity, but not necessarily. It's over. We got to manage it.
So you prefer them to be there for the long term?
For a longer term, yeah.
Okay.
Traditionally, private equity has a 2-20 model. It works on a carry basis from a fee perspective. Futuregrowth, we also have a flat fee structure. So, it also changes in terms of how we look at investment. So, those are the key differences.
So what is the benchmark and the performance targets of these funds? Are they commensurate with other investments out there?
Benchmark is CPI plus 10, when we have a performance target of north of 18%.
North of 18%?
Yeah, that's what we're aiming to get.
And have you got that in the past?
Yes, I think we're on track for that. There are some investments that will have a J curve, but we definitely in line to perform.
Okay, so targeting a performance target of 18% implies risk. You're taking on quite a bit of risk.
Yeah. So yeah, taking on risk. I mean, but I think the key thing is, remember, we are debt house first. So we approach these investments with a debt mindset. So while we say taking on risk, we also, our investment committees have the majority of the composition of the committees, and the individuals behind them have a debt mindset. So we take on risk, but we manage that risk. And over and above that, the fund itself is extremely diverse. And within it, I think I may as go as far as saying one of the diverse funds in the country. We have exposure to transport, energy, health, education, affordable housing. We have agriculture, and now recently aquaculture.
Let's talk a little bit around aquaculture. What is aquaculture?
So the aquaculture space is quite broad, and what happened is, recently, as I said, focused on aquaculture. There's a release going out soon that we've earmarked about 100 million for aquaculture. It varies. I mean, one of the investments we looked at now is in the abalone space, but it could be mussels, it could be sort of fish farming, and over and above that, if you look at where this is stemmed from. A couple of years ago, President Jacob Zuma, through the Operation Pakisa program, has actually earmarked how do we add value, how do we create jobs in this country, and he says we need to tap into the oceans and the oceans economy, and we buy into that, and hence, as I said, we've earmarked kind of 100 million for those sort of investments.
So you've already found equity deals in the aquaculture space that you've currently funded. Where are these farms? Are they on our coasts?
Yeah, so it varies, and they're across on our coastlines. Yes.
And would most of the produce be for export?
A lot of it is, especially in the abalone space, is for export. Yeah.
And how much kind of job creation happens around these farms?
It's quite interesting because if you look at, for instance, the whole entire value chain, you have the inception, the farming, and then where the sort of job creation happens is at the processing level, at the pack house level. So we are seeing jobs, and hence we like the scale, the space.
Okay, so you're creating jobs in those kind of distant communities where people aren't able to move as well.
Exactly.
Okay,
yeah.
that's fantastic.
And then that fits in with Futuregrowth's sort of long-term view, and again back to the developmental nature of the fund.
It absolutely does, and what still astounds me is that performance target that you've been able to reach over the longer term.
Yeah, I think it's important to realize is what we realized quite early on. Developmental doesn't necessarily giving up returns. So you can have, and it goes hand in hand. You can have developmental sort of impact as well as commercial returns.
That's hugely important, and I think the South African investor needs to understand that developmental doesn't mean a performance compromise. So, what advice would you give to companies who are looking to raise funds for these kind of projects?
So, I think ultimately each business is different. It depends on where the specific business is in its growth sort of cycle. I think it's the key thing I'd advise them is to partner with individuals who can provide you with the capital required. So in some instances, a business may have sufficient equity but need debt, or it could be an opportunity for mezz, or it could be an opportunity for equity, mezzanine funding,
Okay.
sort of high yielding sort of debt, and or it could be an opportunity for equity. And I think that's what we do so well here. So one, we can identify and offer products across the board, across the capital spectrum, and over and above that, the key thing with us is we partner. And a lot of our businesses, we've seen them from the beginning all the way to the end. And because we, as I mentioned earlier on, back to my point on the sort of long-term investment horizon, we're never going to put our sort of core shareholders, founder shareholders under pressure and force an exit. If the business is doing well and we can fund them all the way, you don't have to list. But if it's the intention of the founders to list, then we'll support that as well.
So Futuregrowth is actually a fantastic facilitator of cash. How do you match up with the projects? Do people know about Futuregrowth and come looking for the funding, or is it all on the back of your research looking for the projects?
So, the focus has changed recently. As I said, initially the fund was born of the idea that we are the debt house. We get a lot of investments from the debt side. But recently we're also going out there and looking for equity funding, looking for projects that are, has a sort of double whammy sort of developmental / equity sort of feel to it. So it's both.
Okay, so there's a lot of pressure on you to find those projects that are going to give you that fantastic return. Amrish Narrandes, thank you so much for talking to me today. He's an investment analyst at Futuregrowth Asset Management.